So a big part of this channel is in sharing my own personal investing journey, and that includes reviews of my full investing portfolio as well as the passive income that I earn from dividends. But what it also includes is my own views and breakdown of companies in the market and whether I think they would be good investments. Well, I have just come across a share that I personally think is showing some good value and that has the potential for some good growth in the future, and in the present is paying some pretty nice dividends as well. So, in this video, we're going to take a look at the company, break down its performance and future prospects, and at the end of the video, I'm going to be buying it live and in real time. So, let's get started. Now, if you guys like these videos where I show you companies I have come across and break them down to see whether they are worth investing in, then please remember to like this video here and subscribe if you haven't already to see more stock insights like this one. Okay, now guys, I have to start off with the important stuff. As you know, the views in these videos are entirely my own. I'm not giving financial advice. I'm just a finance and investing enthusiast, and I like to share my investing journey and my thoughts on companies and the markets. Remember to do your own research before making any investments to make sure that something is or isn't what you want in your portfolio. So, with that being said, I want to take you guys through a company and stock that I became aware of this week, initially from an article in Motley Fool, and the more I have looked into it, for me at least, the better it seems. But please watch until the end of the video because I have a disclaimer on the share as well. Alright, so the share that I have been looking at is called IG Group, and IG Group is essentially a UK company that provides platforms for investing, trading, and various other types of investing instruments. In some ways, it's similar to your Easy Equities or Robinhood or platforms like that, but with IG they go way back further than them, and in fact they actually started their business back in 1974, half a century ago, when the world first changed away from linking the values of currencies to the price of gold. Yeah, it goes that far back. They basically started IG at the time as a way for people to speculate and trade on the price of gold, and since then they've moved into CFD trading and investing, and currently they have around 2,000 staff, and in 2021 held a market value of around £3 billion. They're listed on the London Stock Exchange, and it's one of the biggest trading and investing platforms in the world. Now, what first drew me to this company is its dividends, because as you might know, I enjoy dividend investing and growing a passive income for myself, and quite a few shares in my portfolio are geared towards paying good dividends, with the share price considered as well. And currently IG Group is paying around 6.3% in dividends a year, which it distributes every 6 months, usually in February and September. And these dividends have increased every 6 months compared to the prior year since COVID. So overall, that's a very nice and healthy dividend yield. But as you will find in the stock market, a good dividend doesn't always make it a great investment, because if you're getting 5% dividends a year, but the share price goes down by 6% a year, that's obviously not great. Which is why I'm always on the lookout for companies with good dividends and also has the potential for a decent to good share price growth as well. And that's when I started to look at the IG Group share price graph. So as you can see here, IG Group's share price over 19 years has grown by a bit over 500%, and some basic maths will tell us that this is a share price growth of on average 26% a year, which is pretty good in my books. In fact, over the last 5 years, if you include dividends, it has performed about the same as the S&P 500. So if you are a long-term investor like me, then over the long term you expect that it could have some decent share price growth. But now we get to the interesting part of the video where I'm going to share some of my thoughts as to why this is a share I wanted to add to my portfolio. As you can see, since 2021 the share price has started to come down, and that lower share price is also why the dividends are higher at the moment. And the reason for that is simply because they make their money from people trading and investing on their platform. And when inflation is high and interest rates are high, it means the cost of living goes up around the world, and it means people are paying more on their debts and essentially have less money in their pockets, and so they're not investing as much. Also, their trading income from their platform is made where there is a lot of volatility in the market, because people then trade more frequently, as you can't make money trading if the market is flat. So, this brings me to my next point, and then I'll get to the disclaimer as well. You always make the best returns in the markets if you invest before the tide turns. Just look at January last year, when in the first video of the year I listed Amazon as one of my top 5 best stock picks for 2023. And because it has had a drop of 47% in share price last year, it seems for many to be at a good value, with analysts saying it's trading at 49% lower than its fair value, with earnings growth forecast at 45% a year. While it's low, maybe this is one share to get in on. And at the time, Amazon had just come off of a massive 54% drop in its share price value, but for a number of reasons I mentioned in the video, I thought it would be a good time to invest, and since then the share price has gone up by 114% in 15 months. Now, I'm not saying all my picks go that way, because all of them don't, but my point is that often you want to invest before the market changes take effect, and in that way you would in theory get the best returns. And before we get to why I think IG Group will do well in the time to come, I just want to mention the Casual Cash Club on Patreon, which is the group where I share my behind the scenes investing activity. Because I can't make a video on everything I do, or every stock pick, or every buy or sell, and I rarely do a video like this for what I buy. So on Casual Cash Club, you get to see every single stock I buy or sell in real time on the day, and the reasons why I am making them. I also share portfolio updates on my personal portfolio each month, and how much passive income I'm getting from dividends, and sometimes just general market insights and tips and tricks. Usually the club is a small $3, but I run a 7-day free trial, so you can access all of my posts for free for 7 days. So if you want to check it out or join, you can click on the link in the description, and if you get a tip from there that helps you to make money, then you've just made money for free. So you might as well check it out. Okay, so let me share with you my thoughts on IG Group in the time to come. Well, part of the reason we said earlier that their share price has gone down recently is because A, with inflation and interest rates so high, people have less money to trade and invest, so their income and share price will go down. And B, low market volatility means they don't make as much trading income, so their income and share price goes down. Well, in 2024, in the year to come, it is possible that those two things will change. Although we don't know for sure, but it is anticipated that most Federal Reserve banks will start to lower interest rates this year on the back of the fact that inflation has been steadily coming down as well. So in theory, this should put more money in people's pockets that they can use to trade and invest. And the second part, as I mentioned in my last video, is that this year is an election year, and over 70 countries will have elections, including the biggest ones such as the USA and the UK, which absolutely means there will be market volatility this year. And volatility means people are trading more, especially during elections, and so their income should, as a byproduct, go up later in the year. So both of these things should possibly help their share price. But then I had a look at their annual report. And it is a bit of a mixed bag, but essentially over the last quarter, their revenue increased from $229 million to $240 million, and despite all the market conditions we mentioned earlier, revenue also increased slightly from the quarter the year before. Their active clients had increased from 263,000 to 266,000 from the last quarter, and their new platform, Tasty Trade, which is geared I think towards the more younger millennial crowd, is showing great results and is up 8% just from the last quarter and up 15% from the prior year. Now, by the full year to date for the third quarter, revenue is down by 6%, which they state is due mostly to the lower market volatility, like we mentioned, although Tasty Trade was up by 24% from prior year to date. And interestingly, they announced a £250 million share buyback, which is where the company buys their own shares back, which typically happens when a company thinks they are undervalued or that they expect an uptick in the time to come. Essentially, the company thinks it's a good time to invest in their own shares, which some might see as a good sign. And honestly, they are not the only ones. Quite a few of the analyst reviews that I see on IG Group say that it is a buy or a strong buy, or here on Simply Wall Street, where their analysts say that it is trading at 50% below its fair value, and that analysts in good agreement that stock price will rise by 29.2%. So from my reviews, it seems overall like a decent idea to add to my portfolio, because dividends are really good at the moment, and for a few reasons it seems to indicate that at some point the share price should rise and possibly do well. But remember I said that there was a disclaimer? Well, this is it. Firstly is the timeline, because none of these things are particularly quick. In order for inflation to come down to acceptable levels, or for interest rates to start going down, or for people to start investing more, or for the elections, which will probably only be later in the year, and even then the financial reporting from all of these possible benefits will be delayed by a few months before it comes out to the public. So, me as a long-term investor, I typically ask myself, will this do well for me over 20 years? And in this case, it is possible that there might still be some share price decline to come, and of course none of us know the future or where things may turn around. So if you're looking for a stock that will show you big green returns tomorrow, or in a month, or 2 or 3 months, this might not be the one. Personally, I think over 1 to 2 to 5 years, it could do well, and I'll probably just continue to dollar cost average into it until that time and take some dividends while I wait. And of course, I could be wrong about everything, but based on what I researched, I do want to add it to my portfolio. So we're going to go into trading 212 that I'm trying out, and we're going to go into IG Group here and buy some shares and add it to my investing portfolio. And guys, that is it for today's video. I hope you enjoyed my breakdown of this stock and hopefully picked up on some information you found useful. Please like the video, and if you want to see how the stock does, you can subscribe to the channel or use the free trial at Casual Cash Club to see it in my portfolio updates. But until then, I will see you guys next time, as always, on Casual Cash. Cheers.